All right, traders, welcome to today's recap. This is Christian from Roberts Tribeca Trade Group, and it is Friday, August 16th. This is your day, and also we'll go over the week performance as usual on Friday. Friday is usually when I like to take a look back at the week's performance, see if we find any trends in there. But we'll go through and kind of take a little bit of a look-see at the performance. Just to start off where we left off in yesterday's video, I thought a big move was coming for today, and it kind of lined up that way in terms of the negative sentiment. A couple things on the tape yesterday that not everything lined up exactly 100% saying go ahead and buy the dip, but it did seem like sentiment was kind of pushed all in one direction. And one of the things that we talked about in yesterday's video too, and I don't have the value area obviously until the very end of the day, but we're talking about how we had this really slim value area, and it didn't take long for us to get over it. S&P futures kind of took off last night, kept going. Came in a little bit on the open, and then we had a positive headline or two. So we'll see as we approach Monday. I'll talk about a couple things. I always give my viewpoint in these videos, so I'll talk a little bit about that. But let's go ahead and break out the weekly chart in S&P. It kind of seems like we've had like a double, maybe a double bottom here, a little bit of a higher low here. So, this is what's called progress, right? And, I think I'm going to bring up the VIX chart next too, but kind of things went in the right direction this way. And you kind of have to start somewhere once you have a sell-off, right? Everybody always gets super spooked. Because it always feels like the end of the world whenever you get one of these dips that happen. But a lot of them, at the end of the day, are buying opportunities, and it's tough to kind of see that. One of the things that I thought was pretty funny was Eric Balchunas, who is the ETF specialist at Bloomberg. He put this together, right? So I thought this was pretty telling, and it's nice to kind of end the week on a little bit of a lighter note. But look at how many times I guess this is story counts that the word recession came up. I mean, come on. So a takeaway from this is when everybody is saying something, it usually doesn't happen. People just are not good at predicting these types of things. I thought this would have been higher. I was looking at this because I remember hearing, and maybe it just didn't show up in keyword searches or in stories, but I remember in December of last year, and I finally got fed up at some point. I'm not sure if it was this. I think it was December. It could have been a little bit older than that, but I remember hearing everything, every, and I think that was more. Brokerage analysts were predicting recession. Everybody was coming out and saying this will be the next recession, and it gets saturated. But this is crazy. So if you're curious, right? I know that people like to do this, right? They like to kind of look at these things, these spikes, and say, where was the market? Where was the S&P then? Do I have this chart still up? If not, I can make one really quick. But if you look back. Let's go. Let me switch this. I think I have to zoom out. Zoom. Reset. Yeah, so 2016. I think pretty sure, right? I mean, I don't have the exact date of this. Probably mid 2016, right around June or July. I think this was then. This was when China, the last time everybody freaked out about China. So here's where we were the last time that people were talking about recession. Recession. That was in June 2016. So, I'm not making any prediction here, but, I mean, if you would have gotten spooked out here and sold everything, that we know what happened there. That was a dip, and look at what's happened since. So just keep that in mind when you hear. The reason why I bring this up is we've been hearing nothing about inverted yield curves and of course recession, which I think is ridiculous to hear that over and over and over. And I've said some snarky remarks on Twitter this week basically a couple of times. I don't usually do that, but when it's enough is enough. I think what was the one statement? It was out of a conference call. I think it was a Walmart conference call, and I heard the CFO made some comments saying that the consumer is pretty healthy and so forth. But hey, if you keep spooking them with putting recession in every news story like this, people will eventually get spooked. I mean, it becomes a self fulfilling prophecy. And I think I remember saying this, so I must have said this either in yesterday's video or the day before. The other thing I just listened to was a tape of Brian Moynihan's interview on Bloomberg. He gave an interview with Bloomberg, and I think CNBC today too. But he was saying that the consumer, that they're saying from their standpoint, they are seeing the consumer continue to spend, and doesn't really see any change there. And we've kind of heard that in the past, right? When this comes up, where we get some type of a dip in an economic stat and so forth. But I still think the same thing. Of course, I live in New York City, so people will always kind of continue to spend here, even though I always see very little cutbacks. Usually you see real estate prices drop and so forth, but anyway, that's a whole nother situation. But yeah, I'm not seeing that in front of my end. And if you're watching this video and you live somewhere across the country, if you happen to see it and I'm missing it, that people are not spending as much as they usually do, I would love to hear where that is occurring and what your viewpoint is on that. But I just don't see many people slowing down. So anyway, that's kind of besides the fact. But what that kind of brings me around to is, do we think again that we've got more upside for next week? And also, what's your conviction, right, that we're going to have upside? Is it, rating 1 out of 10? Where's your conviction? I asked this question in the trading room today, and by the way, we sent out a nice member update. I talked about what my game plan is for next week, so I won't go into all of that because that's for members only. I talked about how just changing strategies up a little bit. Again, that's for members, and if you wish to be a member, you could go to tribecatradegroup.com and see what it's like for a month. We don't do any crystal ball reading or anything like that. We just do pretty straightforward analysis. Watch the technicals, watch the tape, try to really pick up on signals that we see on the tape, and then just have like a pretty logical and common sense viewpoint. And again, using the market webs and just like we kind of found that yesterday, that today would probably trigger a decent move after yesterday's chop. So that was pretty good. Made some money today in a couple different trades, so very nice. So from 1 to 10, right? You have to ask yourself when you're trading, and especially if you're trading options, right? Because options are going to whip around much more. What's your conviction next week, 1 to 10, that we go higher? If you're confident and you really think that we are going higher, of course you could do the same exercise with going lower. But I'm probably for next week probably around like a 6.5 to 7 that I think we go higher. I don't see it out of the realm of possibilities, and I think I said this in yesterday's video, and that's why I'm kind of leaving some room open in case we do kind of come back here and do a triple retest. But if we look at some things, and I'll kind of bring you to where I am in terms of how I get that six to seven that we go higher, is because the VIX kind of really came in. Notice I kind of put a couple weird trend lines in here, but I don't think they're really that important. The couple observations here is that, first of all, this week we did not make a higher high in the VIX. We made a lower high in the VIX from where we were in the beginning of August. So that generally is flipping this around, because when the VIX goes up, usually the market goes down. So that means making a lower high is probably a little bit bullish for the market. Although we did not break down completely yet in the VIX, right? We're still kind of hanging around this 18 level. We haven't taken out these levels. So we're on the bottom range of this little triangle I drew. But I think we're leaning that way. I also think that, things like, hearing the recession term and so forth, an inverted yield curve. These are usually buying opportunities when contrarian buy signals when you hear this stuff, right? It's not really measurable, but just like I showed that the chart of how many times people use the recession, I just don't think that. I think there's more fear, and I think even just to borrow what Brian Moynihan said, you know, the only thing that people have to fear I know this is not his saying, it's Winston Churchill, but everybody, only thing you have to fear about fear is fear itself, right? I mean, that's an old saying, but I think that's what's really going on here. Of course, there's some signals, right, with the yield curve doing what it's doing and TLT doing what it's doing. Um, I'm thinking that this is kind of, this did not break down yet, but started to kind of come off. And I do think that this was a pretty toppy chart. So I would expect us to come in to retrace a little bit more here in TLT. If this happens to get, I mean, first of all, it's still a 79 RSI. So I do expect that to come off a little bit further. What else? I also look at credit spreads. Credit spreads came in a little bit today. They're still heightened. I think that might stick around for a little bit. But option flow today, by the way, I think some buyers kind of came out a little bit. We saw most of which was pretty short-term stuff. I'm still looking for chunky positioning. Didn't really see much of that go on in the tape today. Everything is mainly short-term, but that doesn't necessarily mean that you know that's a sell signal that we're only seeing call activity so short. But again, it's not a perfect picture, and that's why I'm like a 6 to 7 in terms of if we go higher next week. So it is what it is, and I'm kind of positioned that way. I try to think about overall from the very top if I think what the market's going to do for the next week, and then I kind of position accordingly. So I've got some long trades on. I added one today. I added the solar ETF, which I talked about last night on Twitter. I think a pretty nice bounce right there on the top of value right in here. So again, breakout and move in here. And I see this in a bunch of charts. I just did not want to add a bunch of trades today. Match, shame on me because I traded this earlier in the week and I got out of it, but real nice move. I think we nailed that one pretty well. Just poor execution by me by selling a little bit early. But it is what it is. This market has been pretty tough. I was talking to someone earlier too about the headline risk, right? I think that's going to stay with us too. That's also probably why I'm about a 6.5 to 7 out of 10 in terms of being bullish for next week, because these things are pretty difficult to. They're impossible to predict, right? In terms of headlines, and we know what happens. The market has really moved on some of these headlines, so I think you have to be cognizant of that, and you have to have your position size appropriate for that. All right, so I mentioned we'll look at today's the performance for the week. S&P was down 1% for the week. The Dow was down 1.7. Transports got hit harder this week, down 2.1%. If the bright spots again, we know about this one. Bonds were up 4% for the week, and gold. So again, when I look at that chart of TLT and I talk about being overbought, I just think this is historically just much larger of a move in a week. Same thing. If the S&P was up 4% for the week, I would think that would be a little bit tough too, and there would be some profit taking. So you kind of you have to keep that in perspective. If you saw SPYs or Qs up 4% in 1 week, what would you probably be doing at the end of the week? Probably taking some profits, because that doesn't happen a lot. So I think that this is highly unusual as well to see something like this up 4%. Sectors, and I'll go over to my sheet here. Interesting. This is not what I would have said, but the Chinese right? Not what I would have guessed, and that's why we do this exercise every week, where we look at the performance. But the Chinese internet's probably a lot fueled by JD and Baba, which hung in there pretty well this week. Still kind of a messy looking chart. I still think that it's there's other places that I would rather be than BABA. But if you manage to get long BABA for earnings, thinking that it was probably cheap going into earnings, you did a pretty good job there, up 4%. Also, look at where Nvidia closed today. Now, again, this is a nasty looking chart, but it did hold up. I think a lot of people were thinking that it would fade. It did not fade for the day. So again, that's a small, small win. I think. Again, I'm not long Nvidia. I did not play it at all today. There was a little bit of a call buyer that came in right around here during the day, but when we see things like, again, you're kind of checking boxes of things that I don't like, and sometimes when a name reports earnings and it just gets hammered and sellers come in, then I think that's an issue. And the fact that we didn't do that, and that it held the gains, I think is a pretty good sign overall. Going back to the performers for the week, semiconductors actually outperformed up 70 basis points in a tough tape. So again, I kind of view that as pretty decent to see the semis outperform like that. I do feel like they're a little bit leading. Let's see how this looks. Notice it's actually in value. This does not look bad. And you could use a 111.43 stop here. Not a bad looking trade idea. Again, it hasn't retaken the 20-day moving average, so maybe a little bit early. Maybe you could wait for an MACD crossover, but I think it does not look bad either. We saw a little bit of an Intel call buyer too. Not that I want to get long that name, but a couple of these charts don't look bad. Remember, Applied Materials also reported, and Applied Materials actually finished in the red, but hammer bar inside value. All right, moving on. Sectors that got hit, and this is where I think it's, still this market is pretty troubling. Oil services down 4.9%, steel down 4%, retail down 4%, metals and so again, a lot of areas beaten up, a lot more names going down. So we call that, the breadth was pretty limited this week. A lot more areas going down than going up. International. Any surprises here? It's funny because this feels like it was last week, but Argentina, blew up this week, down 25%. That ETF that also took down some areas like Brazil, some of the other emerging markets. You could see all those emerging markets: Greece, Turkey, Nigeria, Russia, Mexico, really took those down. I could tell you from a summary standpoint. If you follow my Twitter feed, you know that I tweet about ETF flows every week. There was a lot of outflows the last 2 weeks in emerging markets. IEMG, that's an ETF that has never seen an outflow in its existence up until about 2 weeks ago. Again, that's IEMG. That's a little bit different than EEM, which also saw heavy outflows the last couple weeks. All right, guys. So that's it. I think we covered enough. We did enough of a week summary here. The main message, bottom line, I think it was fairly constructive, a little bit of a rebound after some big red candles. So I think next week I am positioned a little bit bullish, and in some select areas of the market, and we'll watch volatility next week. We'll keep an eye on bonds. It should be a fun week next week. Have a great week, everybody. See ya Monday.